MicroStrategy stock is not anymore what it used to be. It's way more risky now. MicroStrategy holds much more Bitcoin. It's way more levered up. Let's have a look at the data most people aren't considering. Let's see if it makes sense to buy MicroStrategy over plain old Bitcoin. Have a look at this chart here. In the background, we've got the MSTR stock price together with the individual purchases of Bitcoin along the way. The blue line shows us the market cap of MicroStrategy relative to its Bitcoin holdings, and the green area that we see at the bottom shows the relative gains or temporarily losses of MicroStrategy. Now the gains are at all-time highs. But what we also see is that a lot of the purchases have happened at the absolute top. So it appears as if MicroStrategy is not necessarily buying the bottoms, it's buying whenever it's able to buy, and that's usually when the prices are high. Now here is MicroStrategy's Bitcoin balance over time. And again, we can see how in November and December, Michael Saylor went on a massive buying spree. The number of Bitcoin held has almost doubled within 2 months. What used to be a very cautious buying in the early days, which then slowed down when Bitcoin was super cheap, then accelerated into further and further buying as Bitcoin's price went up. And I don't think that's because Michael Saylor is FOMOing into the market. I think it's simply because that's how much Bitcoin he can buy. When he's currently in losses with the Bitcoin position, then it's very hard to use your company's cash flow as collateral for more Bitcoin loans. But once the Bitcoin holdings go up in value, then you can lever this up even further. Now the issue is that a lot of that leverage happened really when Bitcoin's price has already 5 to 6x from the bottom here at 16K. Now, what's the most important metric for any investor? It's always the reference price to when we bought, right? We always look at the current price relative to our buying price. Are we currently in profit or in losses? And that also dictates our behavior, right? If we are currently 10x in profit, we might consider taking some of that profit. If we are currently in losses, but we long-term believe in the story of that asset, we simply keep on holding. So when we are in the negatives, we hold. When we are in the positives, we might be selling. And so we can extrapolate that reference price that every single investor has to the total market. And that's what's called the realized price. That's the average cost basis of the market. And that's currently at 41,500 roughly. So the market in aggregate is more than 2x in profit. When the market in aggregate is in losses, the sell pressure subsides and the people that are still liquid continue buying. Michael Saylor was not able to buy over here. But when the market is in profit, some people take their profit. Now, Michael Saylor has never sold and he said he will never sell, but still the reference price is a very important metric. And so that's of course a problem if you're buying that high, because this pushes up your average cost basis. Have a look at that. The cost basis of MicroStrategy most of the time was at around 30K. And he was able to move this from 30.7K down to 30.4K with those small little purchases here. But then he's doing the exact opposite of pushing up his cost basis by buying so massively at those all-time highs. Right? Those purchases should have happened over here, but they couldn't happen because, again, MicroStrategy was at losses at the time. In other words, it's very unlikely that we're going to see any significant price stabilization or any significant purchases by MSTR once we fall below 62K in Bitcoin. Because at that level, MicroStrategy will be again in net losses with the Bitcoin holdings. Now, what we've got over here is the MicroStrategy performance relative to Bitcoin. So had you bought MicroStrategy stock instead of Bitcoin when Michael Saylor started buying, you would have outperformed Bitcoin by roughly 200%. Now the volatility also goes up, right? The relative valuation of MicroStrategy to Bitcoin went down temporarily by 78%. But the idea is that MicroStrategy is a levered bet on the Bitcoin price, right? When long-term Bitcoin is going up and we've got a lever on top of that, we should be doing even better than Bitcoin. This is at least what happened in the past. But interestingly enough, that leverage is quite expensive. What we've got here as this green dotted line is the price to earnings ratio of MicroStrategy. This is going up over time because the software business isn't growing as quickly as Bitcoin. So the earnings really don't matter that much. It's still interesting. It's currently at 7.3. Now, the more important numbers are over here, the net asset value premium. So what we're looking at is the market cap of MicroStrategy relative to the Bitcoin holdings, to the value of the Bitcoin holdings. And there's two ways to look at this. We can just look at the relative market caps, or we can also adjust for this for the convertible debt issuance. The picture doesn't really change much. It shows how one Bitcoin purchased via MicroStrategy stock now costs roughly double compared to when you just buy Bitcoin directly. In other words, let's say things turn really bearish and in the end MicroStrategy has to get liquidated. Then the value of the company will pretty much be just the NAV, and then this premium will go to zero. Or in other words, this factor here will go to 1. I don't think it's justified to have that much of a premium. There's all kinds of financial engineering going on with the convertible debt issuance, but that financial engineering in itself doesn't really have any value. You also don't see Berkshire Hathaway, for example, trading 2x above its net asset value. That's not sustainable in my opinion. We've seen the exact opposite happening for the Grayscale Bitcoin Trust. So before there was the ETF, you could buy the Grayscale Bitcoin Trust as a proxy to Bitcoin. And because there wasn't any direct convertibility of the assets that are held by the trust versus Bitcoin itself, there was quite a bit of a difference. And so at one point, it was possible to buy Bitcoin with an almost 50% discount through GBTC. When then the ETF came and the convertibility came, then that discount approached zero. I think the best is to cut out as many middlemen as possible. If we can hold Bitcoin directly, why not do so? Why buy this for double the price through the stock market? If you are of course limited with the deployment of your capital and you have to buy a stock, you cannot buy Bitcoin directly, or you cannot buy an ETF and you have to invest in a stock via, for example, the 401ks, then by all means buy MSTR. But I don't think that MSTR long term is really superior to Bitcoin. The price can deviate a lot from its underlyings. And with the recent massive purchases, MicroStrategy's cost basis is now way higher, and so it's way easier to turn negative again. Now, since Bitcoin hit 100K, it has a pretty hard time climbing. We actually tended to see lower highs and lower lows in the last weeks. And at the same time, there isn't any more money flowing into crypto. This is the stablecoin market cap over the last weeks. And if this continues for too long, then things could potentially turn around again and we could start another bear market. Now, what happened over here was the Terra Luna collapse, right? This is when the Anchor protocol went bust, when the UST stablecoin imploded. It started a bear market that lasted for more than a year, during which also FTX collapsed. But then in October of 2023, we turned around. But now it seems like the market has a hard time expanding further. It's truly becoming player versus player again. Now, when there's altcoin season, we can buy pretty much any cryptocurrency and they all double and triple. But I'm not sure how close that is. Have a look at the others dominance. So this shows how much of all of crypto is in the altcoins that are not in the top 10. And yes, this tends to rise over time and the current risk to reward doesn't look too bad. But have a look at the inverse of that, the Bitcoin dominance. When the Bitcoin dominance is very high and it then subsequently crashes, that's when there's altcoin season, right? The altcoins become more important. Bitcoin becomes in turn less important. Now, there's been two major altcoin seasons in the past. One happened at the end of 2017. The other happened at the beginning of 2021. So it's marked here by those yellow circles. Here is the long-term Bitcoin price with those same yellow circles. So when did altcoin season happen in the past? It happened after we had already a massive bull run in Bitcoin. So Bitcoin made its multiple X returns from the last bear market. And when Bitcoin was very high and when people wondered what's the next Bitcoin, that's then when the altcoins went off. Now the question is the current bull market enough? Last time when we started altcoin season, we went up by almost 1,000%. This time we went up by only 500% roughly. We are a little bit in no man's land. It seems like we're in a similar situation to September of 2018. So that's here, this red circle, right? We are pretty much at the same level in Bitcoin dominance. We are not at those extreme heights where more than 70% of the crypto market is Bitcoin. We are still just at 58% dominance. And so really navigating a time like this is relatively hard. It's more important to really have an edge in the market, to know more than the average market participant, to buy the assets that other winners are buying as well. Just have a look at how confused the market currently is. The best category within crypto in the last 7 days was AI frameworks. But the worst performing category was AI memes. So we can't say that everything AI is going up. Returns are getting more and more concentrated in just a few winners. If you make a 10x, then 9 other people have to lose pretty much everything. It's zero sum right now. The market isn't expanding in the last weeks. And so here is how I navigate the situation. I'm tracking other influencers that tend to make very good trades. For example, here, Kyle Chessy. Kyle Chessy bought the GOAT token at 14 cents. So that was over here. Subsequently, the price went up by more than 800%. But it's important to also take profit, because once attention moves to the next token and the price goes down, we are now only at 33 cents again. You want to be early. You don't want to buy into a token where attention tends to decline. Or here, another Kyle Chessy purchase, Fartcoin at 5 cents. Again, a very, very nice run, more than 3000%. But now attention is declining again, right? It's player versus player. The assets aren't growing that quickly anymore. One more Kyle Chessy purchase at 0.3 cents. 13 comments. Now Griffane is at 44 cents. So a 14,000% gain. And so this is what the game is all about. It's about buying things when not a lot of people know about this. It's about buying things when the insiders start to get in, when the top traders start to get in. Now I've talked about Kyle Chessy now several times. Here is his YouTube channel. He's got 142,000 subscribers. And the reason why we know what he's buying is because we track his wallets. We've got 12 of his wallets where we get signals whenever he's buying or selling something. But we're not just tracking Kyle Chessy. We are also tracking Alex Becker. He's got 1.5 million subscribers. When he talks about a token, of course this generates attention, and attention turns into purchases. We've got 12 of Alex Becker's wallets. Or here we've got Crypto Banter. They've got 1.1 million subscribers. And we've got 33 of their wallets. And so how can we be early? We can be early by buying the things when all the top people are getting in. And so of course now it's more important than ever to be part of this inner circle, right? To not just buy something random on a list, because I'm not sure how close altcoin season really is. Now of course not every trade that an influencer makes will make thousands of percent, because especially the larger tokens, they need a lot of capital to move the price. But the smaller tokens, they are more high risk but also more high reward. And so I really like this strategy. I like the strategy of trying to find other influencer wallets, because the influencers of course don't post this officially. We have to use on-chain analytics to find them. And so I've made several videos. First of all, how can we find those wallets, but then also how can we track the wallets? How can we get alerts whenever they buy or sell? And then how can we interpret the alerts that we get from the tracking? It's all part of the premium membership of this channel. Premium is not just about wallet tracking. It's also about on-chain analytics. It's also about risk management. There's more than 100 videos in total. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I'll refund you 100%. There's really zero risk for you. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.